The Federal Reserve kept rates steady, maintaining the target range of 5.25% to 5.5% in December, but traders' attention turned to policymakers' forecast for rate cuts, including 3 in 2024. The Fed's dot plot of central bankers' rate expectations calls for 4 more cuts in 2025 and 3 cuts in 2026. The Federal Open Market Committee will not be looked back on positively after the central bank did not push back on market expectations for cuts next year, said Brad Conger, Deputy Chief Investment Officer at Hurdle Callahan & Company. Today's statement was Powell's golden chance to press back on the market's undermining of his policy, Conger said. Instead, they used the occasion to congratulate themselves on a mission accomplished. "I fear history will not be kind to this FOMC," he added. The Federal Reserve is willing to cut rates even if the U.S. economy doesn't dip into a recession in 2024, Chair Jerome Powell said. "It could just be a sign that the economy is normalizing and doesn't need the tight policy," he said. Powell also said that the Fed is now seeing progress on inflation across the 3 main core areas. The comments could ease concerns that the projected rate cuts reflect a split opinion on the economy by the Fed members. Overall, they seem to be in tune with economic realities, which is encouraging as we enter a new chapter of the Fed reaction function, Dylan Kramer, Chief Investment Officer for Certuity, said in an email. Central bankers think the labor market is finally easing into a sweet spot. Overall, the development of the labor market has been very positive. It's been a good time for workers to find jobs and get solid wage increases. Federal Reserve Chair Jerome Powell said during a press conference on Wednesday. "You see job growth still strong but moving back down to more sustainable levels given population growth and labor force participation," Powell said, adding that the era of this frantic labor shortage is behind us. Wages are still running higher than what would be consistent with 2% inflation, the Fed's target inflation level, over a long period of time, but have gradually been cooling off, he added. Payrolls grew faster than expected in November while the unemployment rate fell. The inflation fight isn't over, but central bank policymakers will start to discuss policy easing amid signs of cooling in both inflation and the labor market, according to Federal Reserve Chair Jerome Powell. The question of when will it become appropriate to begin dialing back the amount of policy restraint in place that begins to come into view, and is clearly a discussion topic of discussion out in the world and also of discussion for us at our meeting reading today, Powell said. "I would say there's a general expectation that this will be a topic for us looking ahead," he added. The Federal Reserve on Wednesday indicated it could be cutting its key interest rate by 0.75 percentage point in 2024.